Ready to supercharge your investment strategy? Discover 3 proven methods to invest like a pro and secure your financial future. Which one will you choose? Number 1, real estate investment options. Investing in real estate has long been seen as a strong contender against the stock market for long-term investments, and this trend continues in 2023. While buying individual properties requires significant capital and hands-on management, there are more accessible options that fit well within a diversified portfolio. Real estate crowdfunding platforms provide an easier way to invest, allowing you to participate in private capital real estate deals. According to Patrick Donahue, Vice President of Ground Floor Finance, these platforms have shown consistent annualized returns of 10%. You can put as little as $100 into many different projects, which is a better way to diversify your money. Another avenue is investing in real estate investment trusts, REITs, which primarily focus on commercial real estate like office buildings, retail spaces, and large apartment complexes. REITs trade like stocks and typically offer attractive dividend yields with potential for capital appreciation. You can build a diversified portfolio of real estate assets without buying individual properties if you invest in REITs. This makes it an easier and more accessible choice for many investors. Taking a closer look at number 2, dividend stocks. Investing in dividend stocks is a smart move right now, and here's why. They tend to handle market turbulence better than growth stocks, making them a safe bet in uncertain economic times. According to Sam Buhida from AskTraders.com, in the current uncertain climate, it's wise to go for dividend-paying blue-chip stocks. These well-established, high-quality companies offer some stability when things are shaky. Examples of such companies include Apple, MasterCard, Visa, and Walmart, which are considered solid choices. One way to get into this is by considering a group of dividend stocks called the Dividend Aristocrats. Along with these companies, over 60 others in the S&P 500 have raised their payouts for at least 25 years in a row. Websites like Sure Dividend update the list of these stocks every year. You can choose to invest in specific companies you like or invest in the entire group through an exchange-traded fund, ETF. For instance, the ProShares S&P 500 Dividend Aristocrats ETF, NOBL, is a well-known option for this approach. But that's not all. Number 3, exchange-traded funds, ETFs. ETFs have become incredibly popular investments for good reasons. They let you invest in many different types of investments, which instantly spreads out your money. You can trade ETFs like stocks, but not mutual funds. They usually cost the same as or less than a single share. Now you know that you don't need a lot of money to build a diverse portfolio. Robert R. Johnson from Creighton University says that if you want to avoid losing money over time, it's best to invest in low-cost index funds that hold a variety of stocks. These index funds have historically generated solid returns, like the S&P 500, which saw a 10.3% annual return from 1926 to 2022. But you can get even better returns by investing in a mix of smaller stocks. For instance, a basket of small stocks yielded an 11.9% annual return during that same period. ETFs come in various flavors, specializing in growth stocks, dividend stocks, value stocks, international stocks, or specific sectors like technology and healthcare, so you can tailor your investment to your preferences. Robert Michaud of New Frontier Advisors suggests that in this unpredictable world, it's wise to avoid putting all your eggs in one basket. Instead, the best long-term strategy is to create a diversified portfolio using ETFs that match your goals. If that's not possible, you can manage risk by combining a global stock ETF with a bond ETF. What are the key principles for mastering long-term investment success? Let's find out. To invest like a pro, mastering long-term investment strategies. Investing like a seasoned pro involves more than just choosing the right stocks. It's about mastering the strategies that lead to long-term success. To become a more skilled long-term investor, consider these fundamental principles. First and foremost, commit to the long term. Think of investing as a prolonged commitment, similar to building a business. This means staying in the game even when the stock market experiences its inevitable fluctuations. as history has shown that markets tend to recover over time. Next, it's crucial to understand your risk tolerance. This is essentially your comfort level with market ups and downs. Are you a cautious investor or more on the daring side? This understanding will help shape your investment choices. For example, if you tend to be conservative, you might lean towards investments like bonds and dividend stocks, while bolder investors may prefer growth stocks. Various tools such as Vanguard's Investor Questionnaire can assist in pinpointing your risk tolerance. Diversification is another vital strategy. Don't put all your financial eggs in one basket, especially when markets are unpredictable. Spread out your investments among various types of assets, such as cash and fixed income investments in addition to stocks. This diversification helps mitigate the impact of market downturns and provides you with the flexibility to capitalize on lower stock prices when opportunities arise. Consistent contributions to your investment accounts are a crucial part of your long-term strategy. Regularly adding money to your investments, along with any gains you accrue, is akin to a secret ingredient for success. This approach is easy to implement through employer-sponsored retirement plans like a 401k. Still, you can apply the same principle to IRAs or regular investment accounts by arranging automatic deposits from your paycheck. Finally, be vigilant about fees. Whether you're investing in ETFs or mutual funds, the fees associated with your investments matter. Even seemingly minor differences in fees can have a significant impact on your overall returns. Lowering your fees means more money working for you over time. To make informed choices about funds with lower fees, you can utilize tools like FINRA's Fund Analyzer. By following these investment principles and adopting a long-term perspective, you can enhance your chances of success as a prudent investor, ensuring your financial well-being over the years. Becoming a successful investor doesn't require being a financial genius, but it does demand knowing the right long-term investments and having effective strategies to manage them. So, are you prepared to commit to the long term, understand your risk tolerance, and diversify your portfolio to reduce risk? Remember, you're in control of your financial future. If you're uncertain or uncomfortable navigating this on your own, there's no shame in seeking the guidance of a skilled financial advisor. Your financial success is at stake, and making the right choices now can significantly improve your odds. So, which path will you choose to invest like a pro? Let us know in the comments below. If you enjoyed this video and want to see more like it, leave a like and subscribe to our channel if you haven't already. Tap the bell icon to turn on notifications to stay updated with all our latest videos. Thanks for watching, and I'll see you in the next video.